Good morning or good afternoon, class, depending on where you are and what time you're watching this. Uh, I wanted to record this video to kind of cover some of the announcements and really bring you up to speed on where we're at, and to offer you a couple of things that we'll be doing this week. First of all, this video is going to review the Foundational 15 for Chapter 8, and we're going to look at how we solve that problem and go through those steps. And then, second of all, I wanted to kind of go through some of these announcements I made earlier today. So you may have received this by email, you may have seen it in the website, but I wanted to let you know, first of all, when I set this up to go online, I thought we would be able to continue as a regular class, having WebEx sessions on Monday, Wednesday, Friday, and that seemed to be a good plan, but I found out later I cannot make those meetings mandatory. So, what I'm going to do is adjust it a little bit. I'm going to do a couple of things differently here. First, we will have a weekly WebEx meeting on a voluntary basis, and the purpose of that's going to be to do a class check-in and to maybe go through some instruction and problem solving and stuff like that. So the next WebEx session that I'm going to plan will be on Monday, and we'll set that WebEx session at 10, 11, or 1, depending on which section you're in this class. So there's 3 sections I'm teaching. Section 9 meets at 10 a.m., Section 6 meets at 11, and Section 8 will meet at 1 p.m. Eastern Time. So I will do a live WebEx session on Monday. Depending on the section of the class that you're in, will determine what time that we need to meet up and talk. So at that point in time, I will go through some instruction, PowerPoint type things or whatever, but I will also answer your questions about problems if you have some. If you need to go over some things, I'll do that as well. Okay, so that's the first thing. This is item number 1 about the WebEx sessions. The second thing is this video is going to include the Foundational 15 for Chapter 8. I'm posting the document for the Foundational 15 in the module for Chapter 8, as well as an Excel template that one of my colleagues here prepared, and I'd like to share it with you because I think it's a really great way to do this problem online. And I'll be using the Excel template myself to demonstrate the problem. And then there will be a Chapter 8 homework. Third thing here on the list, there will be a Chapter 8 homework assignment available later today, and it'll be due next Wednesday, March 25th. And then that's the third item. Watch for that. That'll appear in the course. And then the fourth thing I want to mention is I'm going to do some virtual office hours this week. Now, what I'm planning on is tomorrow afternoon and Friday afternoon having about 2 hours of virtual office hours for each of those days. And if you would like to meet with me during that time, just let me know. We can arrange either a WebEx session, a phone call, or some other arrangement where we can chat about the problem. There is a chat feature here in Canvas, but I received communication today that suggested that it would be better to utilize WebEx because I guess that with all of the university going online, this feature within Canvas may actually be overloaded at some point. So that's what I'm planning on, and I will have the information related to that later today as an announcement as well. Also, I wanted you to know I'm wrapping up the grading on the last test, and I'm very pleased with the results I've seen so far while grading. I'll be posting those later this week. Now I'm going to go through those, and because we will not be able to do test corrections, I'm going to do some analytics with that. And this time, because of the issues with not being able to do text corrections, I'm going to go ahead and do a curve based on the results. So depending on where you arrive in the class, where your grades are, uh, we will curve that according to the results that I see after I do some more in-depth analysis of it. Okay, so the last thing here I wanted to tell you is if you have any questions about anything, contact me by email, which many of you have already done, and I've tried to respond as quickly as possible. You can also request that we do a WebEx chat, which I'm totally okay with. If you want to do some virtual office hours, we can do that with WebEx. I'm very happy to do that with you. Or if you want to contact me by phone when I'm here at the office where I'm at today doing this recording, my office telephone number is 765-285-5116. If you need to contact me outside of those hours, send me an email, and we can set something up by, like I said, video chat or text or whatever else we need to do. We can definitely handle that and do it through a phone call if we need to. But my office hours that I'm setting right now typically have been on Wednesday afternoon, Friday afternoon, but this week I'm going to have them on Thursday and Friday instead. I'm using today, this afternoon, to record these videos for your utilization. So that's those announcements. I have, and now we'll go ahead and move into the Chapter 8, Foundational 15. Okay, this is the Foundational 15 for this week. For this chapter, Chapter 8, this Foundational 15 talks about Morganton Company, makes one product and provided the following information to help prepare the master budget. And then it goes through these 7 items that we need to know. They have a budgeted selling price per unit of $70 and budgeted sales for June, July, August, and September as reported here. 40% of the credit sales are collected in the month of sale and 60% in the month following. The ending finished good inventory equals 20% of the following month's unit sales. Ending raw materials, we don't need to deal with that quite yet. The 30% of raw materials purchases are paid for in the month of purchase and 70% in the following month. And then direct labor wage rate is $15 per hour. And then the variable selling and admin expense per unit sold is $1.80. The fixed selling and admin is $60,000. So we start with the first question: what is the budgeted sales for July? And so we're basically going to this template I mentioned earlier in the video that is available for you in Canvas. So what we have here in number 1, we need to fill in this information for the sales in terms of units. So we have June, we have 8,400 units. July, we have 10,000 units. August, we have 12,000 units. In September, we have 13,000 units. Now, the problem only asks us about July sales, although since I'm an accountant, I'm kind of, I see something incomplete, I want to fill it in. So I'm just going to put this $70 per unit all the way across here so you can actually calculate the sales. So the sales in dollars is going to be 70 times 8,400 for June. It's going to be 70 times 10,000 for July. It's going to be 70 times 12,000 for August, and then 70 times 13,000 for September. Now, these grayed out areas on this template are to be calculated, and you want to fill this in. So the way of doing that, the answer though that they're asking for number one is here in the yellow square. So for number two, we go to number two on this sheet, and it says, what are the expected cash collections for July? Well, if we look at the explanation up here, the month of sale, we collect 40%, and the month following the sale, we collect 60%. What that means is, with these sales being what they are, that we are going to collect some money from the June sales. So we have June, and the balance that we collect in June from the June sales is going to be 60% of what those sales were. So we have 588,000. We're going to multiply that by 60%, and we'll have 352,800 collections from June, and then we have a piece of July. So we take the July sales of 700,000, and we're going to multiply that by 0.40, so that we have 0.40 times 700,000. That's 280,000. And then we're just going to add those two together. So we have this plus 352,000. And that's the answer we're looking for number two. The expected cash receipts in July is 632,800. Then for number three in the problem, they're asking us, what is the accounts receivable balance at the end of July? And this is just like what we did in class, and many of you were quite onto this. You understood exactly what we were talking about. With number three, it's just what we did not collect yet. So if we go back to our worksheet, the portion of July sales that we didn't collect yet is going to be the 700,000 times 40%. I mean 60%. I'm sorry, not 40. We already did 40. So you're going to have 700,000 times 60%, which gives you 420,000. Now, if we were to add these two numbers together, we would have the total sales for July of 700,000. Okay, so that's through number three. We look at number four, and it says here, according to the production budget, how many units should be produced in July? Well, let's go ahead and prepare the production budget that we need to calculate what we actually need to have in July. And we're going to do that here. We're going to start with the sales that we have in units. So we have 8,400 units. Oh, not 44. 8,400 units in June, 10,000 units in July, 12,000 in August, and 13,000 in September. Okay, and then it says, according to the problem, if we go back here and look at this, it says that the ending finished goods inventory equals 20% of the following month's unit sales. So we need to calculate what we want the desired ending inventory to be. And so when we look at that, we're going to go over here to this 10,000. Sorry, when there first, I need to push the equals thing first, and then that times 0.2 or 20% gives us the number of units we want in ending inventory in June. So we add those two together. We get 10,400, as the ending inventory. Now, this is the ending inventory or desired ending inventory. I need to move this over. It's not going to fit. Oops. So sales, desired ending inventory. And then we have total needs, total production needs. And then we're going to subtract out the beginning inventory. So we say, what was the beginning inventory for June? Well, if we go back to our document here, so when we get to the beginning inventory number, we're going to utilize actually a calculation. What would have been the ending inventory in May would have been this June production number times 20%. The ending inventory in May becomes the beginning inventory for June. So what we do here is we calculate what we would have done in May for the ending inventory. So we take this 8,400 times 0.20 and we get the beginning inventory. So we actually calculate then a production budget, which is our total units to produce of, let me do this, will be 8,720. Now, with July, we're going to move into, again, calculating what we want the ending inventory to be based on August. So we have the August number times 0.20 gives us 2,400. We add the 2,400 to the 10,000, we get 12,400. So our beginning inventory here would be what? Beginning inventory here would be the ending inventory from last month. So we have 2,000 units. So we're going to use this $2,000 unit number right here. So we have 2,000, and we're going to subtract that 2,000 from the 12,400. We need to go ahead and complete this production budget for August just because, well, we want to do it. Let's just go ahead and finish it up. So what we have then for desired ending inventory in September is going to be August is 20% of the September production number, and we're going to take our sales 13,000 times 0.20. So we have 13,000 units projected to be sold in September. We want 20% of that as our ending inventory. We're going to add that to the projected sales for August in units. Okay, so then we look at this and we say, okay, what is our beginning inventory? Well, in August, it's the ending inventory from July is our beginning inventory. So we put that here. And we have a total units to be produced of 12,200 in August. Okay, so that's number 4. Number 5 on this schedule says if 61,000 pounds of raw material are needed to meet production in August, how many pounds of raw material should be produced in July? Well, so 61,000 pounds are needed to meet production in August. How many pounds of raw material should be purchased in July? So let's go back to the calculation then, and we're going to look at this, and we're going to say, okay, what do we need? Well, in number 5, we have the required units to produce. And so we want to calculate exactly what it is we're going to require. So we have the units to produce based on our production budget for June is 8,720 coming from here. Our units required to produce for July are 10,400 coming from here. And our required units to produce coming from August are 12,000 coming 200 coming from up here. 12,200. Okay, so basically what we're going to do then is identify, we're going to identify the pounds of raw material needed for each of these units. And if we look back here in the instructions on, if we go up to here, number 4, the ending raw materials inventory equals 10%. Each unit of finished goods requires 5 pounds of raw materials. The raw materials cost $2 a pound. So that's where we're going to get our information from. So in August, it takes 5 pounds. Well, it does for all of these, 5 pounds of raw material. But look at this. We take this times the 12.2, we get the 61,000 pounds. What it says in number 5, if we look back at that, if 61,000 pounds of raw materials are needed to meet production in August, how many pounds of raw materials should be purchased in July? So that's how we know we're on the right track. We have the 61,000. That's how we get that. So we're going to calculate based on this units of raw material or pounds of raw material per unit. And we're going to calculate then total pounds needed. So this is going to be that times 5 for June. We have 10,004 times 5 for July. So we have the total pounds needed in June, July, and August are laid out here, at least before we consider the desired ending inventory. So we're going to have a desired ending inventory that's going to be 10% of the following month's raw materials that we need. Okay, so what that means is here the desired ending inventory for June is going to be 10% of what we actually need in July. So we're going to take, again, this July number times 0.10 to get the desired ending inventory of 5,200. We're going to add in that desired ending inventory to, that's 5,200 pounds. We're going to add that in to our production needs for June. We have 48,800 pounds. We need to take out, though, this is the pounds of raw material needed. Then we're going to deduct less the beginning inventory. Well, I gotta spell that better. Well, if we look at this, just like we did with the production budget, we know that the beginning inventory for June will be 10% of this, which is the ending inventory in May, right? We're looking for the ending inventory in May, and that means that this 43,600 times 10% is the beginning inventory for June and the ending inventory for May. So we put 4360 here, or we can actually show the calculation. That's probably best. Times 0.10, 4360. So our actual ending raw materials to be purchased for June is 44,440. When we go to July, we're going to have a desired ending inventory in July of this 61,000 times 10%, 6,100. We add that to the 52,000, we get 58,100, and then we deduct this ending inventory from June out as a beginning inventory for July. And we say, okay, this is going to be 58,100 minus 52,000. So we get a total raw materials needed for production in July of 52,900. So that's our answer to number 5. That's what we need to purchase in July. Number 6 on this schedule is, what is the estimated cost of raw material purchases for July? Well, we're going to look at that here and calculate it. So if we take the actual cost of raw materials purchased in July, it's going to be $2 a pound. That's what, if we look back here, if we go up here to this schedule, it talks about the raw materials cost $2 a pound. So basically, we come back here and we say, all right, whatever we had in June and July, we're going to have the required units or pounds of raw materials needed. Okay, quit that out. Close this out. Don't need it. So we have the pounds of raw materials needed for June, and that's going to be 44,440. For July, it's going to be 52,900. These are the numbers that come right from here. We'll have the cost per pound is $2 for June, $2 for July. So we have $2 times that. We have $2 times the pounds needed. So we have total cost of raw materials of 88,880 in June and 105,800 in July. Okay, so that answers number 6. We get to number 7 here. And it says, in July, what are the total estimated cash disbursements for raw materials? Assume the cost of raw materials purchases in June is 88,880, which is what we calculated. So if we look at number 7, we have to calculate what are we going to spend or disperse in July for the purchases in June, and in July for the purchases in July. Well, if we look back here, it says to us 30% in number 5 here, 30% of raw material purchases are paid for in the month of purchase and 70% in the following month. So if we go back to our calculation, we're going to say, okay, the purchases in June that we're going to collect are going to be, wait a minute, what did I do? I just need to move that down. Okay. So we have June purchases of 88,880. And we're going to multiply that by 70% because we projected, remember, from the problem that we're going to actually pay out 70% of that in the month following this purchase. So we take that 70% times 88,880. For July purchases, we're going to take the 105,800 times 30%. And that'll give us 31,740, not 50. So we have a total then between the two of 93,956. Okay, that's the answer to number 7. That's how we calculate it. We're going to go through and calculate those purchases based on the projected payments. That's our actual cash flow outflow that we're going to have for this. With number 8, we are looking at what is the estimated accounts payable balance at the end of July. Well, it's just whatever we haven't paid yet from our purchases in July. So at the end of July, we have 70% of an accounts payable balance. So we have accounts payable balance is going to be 105,800 times 0.70. So we take 0.7 times 105,800, we get 74,060. Okay, so that's our accounts payable balance in July. All right. That's number 8. Let me add July here because I want to make sure we know what that is. Okay, number 9 asks us, what is the estimated raw materials inventory balance at the end of July? Well, if we're looking at the balance in raw materials, we're going to have raw materials pounds of 6,100. Because remember, we were projecting, and this is July, we're projecting 10% of the pounds right here that are going to be in August. So we have 10% of those in pounds right here. So we take that raw material balance of 6,100 and we basically multiply it by 2 to get whatever the cost of that inventory is. It's going to be 12,200. Okay, so we look at number 10 here. It says, what is the total estimated direct labor cost for July, assuming the direct labor workforce is adjusted to match the hours required to produce the forecasted number of units produced? So if we go back here in number 10, we're going to have the required units of production, or required production units, or whatever we want to call it. Required production units. And that's going to be 10,400. Then we're going to have the direct labor hours required. And if we go back to our document that we're looking at, we have this number 6 up here. The direct labor wage rate is $15 an hour, and each unit of finished goods requires 2 direct labor hours. So we go back to that and we use it. And we have 2 hours for each unit. So we're going to have a total then of 20,800 hours. So those are the direct labor hours required for production. And then we're going to have the direct labor rate per hour, which is going to be $15 right here. And we multiply that out to calculate the cost of the direct labor. So we have at the end total direct labor costs. $312,000. Okay. All right. Number 11 asks us if we assume there is no fixed manufacturing overhead and the variable manufacturing overhead is $10 per direct labor hour, what is the estimated unit product cost? So what is the estimated direct product cost? So when we look at this, we're going to start with direct material, which is raw material. We have a cost, or we have a requirement of 5 pounds per unit and a cost of $2 a unit. So we have a cost per each unit produced of $10 for the direct material. Remember, 5 pounds times $2 a pound. Okay, then we have direct labor. And we have 2 hours of direct labor required for each unit and $15 per hour for each hour of direct labor. So we're going to have a total then of $30 for each unit produced in direct labor. And then the last thing that we have is manufacturing overhead. In this case, we have, we're going to base it on the hours of direct labor, which is 2 hours per unit. But in this case, what it says is the overhead rate is $10 per labor hour. So we're going to multiply that times 10. The direct labor wage rate is 15 for each hour, but in the overhead, we're applying it based on labor hours, but it's going to be an overhead rate of $10 a labor hour. So we take that times the 2, we get 20, and we're going to add these up. Get a direct total product cost per unit of $60, okay? All right, number 12 in this problem, we'll come to that next. What is the estimated finished goods inventory balance at the end of July? Well, we're going to look at the ending finished goods balance, which is going to be based on 10% of the production needs in August. So we're really looking at the ending balance on a per unit basis. And if we go back to our earlier calculation up here, we said the ending inventory balance in units is 2,400 based on our production needs in August. So if we go back to where we were, we're going to say that we need to calculate this. In number 12, we're going to have an ending finished goods inventory in July of 2,400 units. That's based on production needs in August. And we're going to have a unit cost based on our just completed calculation of $60 per unit. That means the value of our finished good inventory is 2,400 times 60. So we have $144,000 value in our ending finished goods inventory. Okay, so for number 13 then, the question is, what is the estimated cost of goods sold and gross margin for July? So let's go back to the calculation. We need to estimate cost of goods sold. So we have unit sales, and this is for July. We have 10,000 units. And we're going to have a unit cost for those sales of $60 that we calculated right here, remember? So we have unit product cost. So our total estimated cost of goods sold is going to be $60 times 10,000 units, or $600,000. Okay? So if we look at this and we're going to calculate the gross margin, basically what we're looking at are sales. So we have our sales from our very first question where we had $700,000 in sales. And then we have our estimated cost of goods sold based on this question right here, 600,000, which means our gross margin is going to be 100,000. So we have a gross margin of $100,000, okay? Number 14 asks us, what is the estimated total selling and administrative expense for July? Well, again, we go back here, but we also look back at this number 8 up above, or number 7, not 8. It says the variable selling and admin expense per unit sold is $1.80. The fixed selling and admin is $60,000 a month. So if we're going to calculate that, we're going to have two components. We're going to have the variable component. So we're going to have a variable component based on the number of units sold. So we have units sold in July of 10,000 units. And then we have the variable selling and admin per unit, which is $1.80. That means that our variable selling and admin costs are $18,000, okay? So variable selling and admin. And then we have the fixed portion. So we have fixed selling and admin, 60,000. And we add those together, we get $78,000. So that's the answer to number 14. Okay, now the final question on here is, what is the estimated net operating income for July? Well, we know what the margin is, what we calculated as the gross margin. So we're going to start with that. For number 15, we go back to this gross margin here of 100,000. And we're going to deduct selling and admin expense, which is 78,000. We get a total then net profit or net operating income. I prefer that. Net operating income of $22,000. So this is the foundational 15. I suggest that you take a look at this video, practice these calculations. Again, Chapter 8 will be part of the next exam. I can tell you for sure that some of these calculations will make their way to that exam. So for the current, for Wednesday, the assignment is look at this video, practice with the foundational 15, and then the assignment for Chapter 8 will appear shortly after this. Okay. So I look forward to seeing you guys, talking with you on either Thursday or Friday this week when we do virtual office hours. If you have any questions in the meantime, please send me an email. I'll be glad to respond to that. Have a great day.